tax on Chinese imports is now at 125%.
Beijing is hiking its retaliatory tariffs on U.S. goods today from 84% to 125%, and for the first time since this all started.
China, the giant economy with one of the world's largest manufacturing bases, seems to have escalated its trade tensions with the United States. Just a day ago, Beijing protested against the steps taken by the Washington administration and raised its tariffs to 125%, up from 84% at the time. The sudden hike has caused widespread repercussions internationally. Chinese President Xi's call for the European Union to unite against Trump's trade policies, which he described as bullying, came in the shadow of this harsh outburst. Xi's remarks are seen as a call to protect the basic principles of global trade. While his voice is being heard in European capitals on the US front, President Trump continues to defend his high tariffs on China. This has once again pushed the question, will there be a softening, which has been on the agenda frequently over the past week, into uncertainty. But on the other hand, it is thought that Trump is afraid that China will use a very big trump card. This is a separate news item. The previous day, news reports had signalled Beijing's plans to impose new sanctions on US firms, and now it seems that these plans have reached a much more decisive dimension. Yesterday, the Chinese Ministry of Commerce stunned the world community by announcing restrictions on the export and cooperation activities of 18 American companies. Beijing argues that these companies have long been supportive of the unilateral and unfair US tariffs. It therefore declared that it would not hesitate to publish such a list in defense of its national interests. What was most striking at the time was that China was already imposing additional tariffs on US goods. However, it was said that this tariff rate was kept at 84%, and comments were made that maybe they won't raise it further. This is an intimidation. Now, in response to the US retaliatory steps, Beijing has thrown the 125% tariff card on the table. For Washington, this will further complicate the supply chain for many companies, including Apple, the automotive industry, and high tech. US companies seeking to enter the Chinese market will now face a much heavier financial burden at the customs gate. In a new announcement at the beginning of the week, the Trump administration made a sudden reversal, first announcing that it had reduced tariffs to 10%, much to the relief of many countries, but adding that measures against China will continue. Moreover, at that very moment, it signaled that it would raise the tariff rate against China to 125%. Despite the seriousness of this move, Beijing was initially cool-headed, saying, "We find it disproportionate and aggressive, and we will respond soon." That response came yesterday. Restrictions on 18 US firms and today's move to raise tariffs to 125%, coupled with Xi's call for Europe to stand up to this bullying, have heated things up. European Union leaders found Xi's remarks remarkable. The Trump administration statement, "We're not bullying anyone, we're just demanding fair trade terms," made headlines in the world press. Xi's call for the EU to unite against Trump's bullying is of course also linked to Beijing's desire not to be alone on the global stage. Previously, Europe had secured a short-term waiver from Trump's tariffs, with the phrase "a 90-day break in reciprocal tariffs" on the agenda. This was reflected in the news headlines as European shares rise after Trump's tariff suspension. Likewise, there was a relief rally in the US stock market and investors were in a mood of partial peace. However, this optimism was already incomplete with China out of the picture. Now that Xi has said we must show global solidarity instead of accepting such unilateral agreements, it remains to be seen how EU leaders will respond to this call. The EU has taken an economic breather after last week's surge, but it does not want to turn its back on China completely. Trump's move, described as a sudden reversal, included a decision to reduce most tariffs to 10%, but it became clear on the same day that he had raised China's to 125%. This extraordinary dichotomy is seen by the international media as a divide and rule strategy. In other words, the US president is trying to partially appease other trading partners in order to isolate them against China. Xi's call for solidarity with the EU could be a step to disrupt this strategy. Earlier, French President Macron said, "We have a period of uncertainty ahead of us, perhaps 90 days, adding that the stability of European economies was threatened by Trump's frequent decisions. The fact that Xi's "Let's Unite" message comes precisely in this uncertain environment also confuses Europe. While European shares have rallied on the back of some of the trade frictions with the US, there are European companies that benefit from the Chinese market, and they are not willing to turn their backs on Beijing. Yesterday's headline: China imposes restrictions on 18 US firms over Trump's tariffs, has been amplified by today's developments. Because when Beijing made this move, it saw that the US was also raising tariffs against it step by step. Now the picture is clear. The tariffs on US products suddenly jumped from 84% to 125%. For Beijing, this means that we will also put a harder fist on the table. At any moment, it would not surprise anyone to hear that China has imposed a total ban on technology or agricultural goods from the US. Some analysts warn that this trade war may not just be limited to tariffs, but could escalate into a full-scale confrontation over a wide range of issues, from finance to technology transfers. For example, the claim that China may start selling its holdings of US bonds is a scenario big enough to alarm the Trump administration. Even though US markets have headlined stocks rally on relief after Trump's tariff suspension, the sustainability of this rally is uncertain. The fact that yesterday's tariff hike did not include China gave some relief to the markets, but now that tensions between Beijing and Washington have peaked again, investors are again nervous. The question, will we see another sharp decline today, is occupying Wall Street lobbies. Economists remind Trump's statement that we will experience transition pains, but in the end, we will be the winners. But with the global conjuncture so fragile, major shocks could come knocking in the short term. If the EU heeds Xi's call to stand up to the US together, transatlantic relations could be strained again. For the moment, there is no clear response from the EU, but Xi's statement, "Let's unite against Trump's bullying," has been widely echoed. The picture painted the previous day was that Trump's tariff policy was two-faced. While giving some countries a breathing space, he wanted to maintain heavy sanctions on China. In response, Beijing threatened, "We have our own list ready. We started with restrictions on 18 American companies, and more may follow." The fact that this rate remained at 84% until yesterday morning triggered the comments that maybe Beijing will not go further. However, the US retaliatory statements were in the form of, "We are just showing goodwill. It is not our desire to deepen this trade war, but we will take it if necessary." There were even leaks from the White House saying, if China raises tariffs, we will impose additional measures. As a matter of fact, it seems that this threat has exhausted the patience of the Xi administration. The tariff, which has now been raised to 125%, could virtually eliminate the competitiveness of many products from the US in the Chinese market. Especially companies in the agriculture and high-tech sectors are expected to face difficulties. Recently, giant companies, especially Apple, have been looking for ways to turn to India. The question of whether this news will accelerate the idea of breaking away from the Chinese market is also on the agenda. Xi's call on the EU to show solidarity against Trump's bullying leaves European leaders in a dilemma. On the one hand, they have huge trade volumes with China, and on the other, they have common defense and economic ties with the US. Transatlantic economic relations are one of the EU's lifeblood. Macron's talk of 90 days of uncertainty bears traces of this dilemma. For now, Trump winked at Europe and suspended tariffs for 90 days, but Beijing's behaviour is also drawing the attention of the EU. European markets might be tempted to think, if we stay out of the global trade war, will we benefit? But Xi says, if we speak with a common voice, the US will be forced to back down. Chinese diplomats plan to meet EU representatives in Brussels to propose comprehensive trade agreements. This confirms the interpretation that the world's two major economic powers, the US and China, are in a race to win the EU over to their side. At this stage, the repercussions of the news that Trump announced a sudden reversal in tariffs. He reduced most of them to 10%, but increased China's to 125%, are rapidly being felt on the ground. European stocks were on the rise with this development last week, breathing with the perception that the tension between the US and the EU is decreasing. Now, Xi's exit raises the question, will the EU only look after its own comfort, or will it cooperate with China to protect the global trade system? Washington's intention seems to be full court press against China, while Beijing's seems to be, if the US is tough, we are tougher, the EU should stand with us. Caught in the middle, Europe worries, if we take a stand now, will we face US retaliation? For this reason, diplomatic circles in Brussels are cautious about Xi's call, but there are those who say we cannot miss such a great opportunity to enter the Chinese market. Another important development yesterday was the news that stock markets were experiencing a relief rally. US stocks rebounded quickly on reports that Trump had lowered tariffs for other countries. Likewise, European stocks also accelerated upwards with the headlines of rises after Trump's tariff suspension. But the permanence of these rallies is highly dependent on the tension on the China-US axis. If Xi's 125% exit comes into full effect and Trump responds with additional steps, it may be inevitable for global markets to enter a new shake-up. American producers are afraid of losing the Chinese market, and China is preparing a retaliation list by favouring its own companies that want a share of the US market. As it becomes clear which companies will be included in this list, waves of panic may rise in the markets. French President Macron used the term 90 days to indicate that this is a kind of waiting period for the world economy. In other words, it would be necessary to see the outcome of the tariff truce between the EU and the US and to watch whether China would get involved in this process. Xi's statement was a way of saying to EU leaders, this truce is just to fool you. It may be your turn too. Indeed, we have seen examples of ceasefire today, war tomorrow in Trump's politics. In recent months, many agreements have brought short-term relief, followed by aggressive tariffs. So the EU will have to decide who to stand with in the long run as it evaluates Xi's call for unity. On the other hand, the majority of Europeans believe that trade wars are good for no one. While this does not necessarily mean full support for Xi, it also shows that Trump's policies are not welcomed. At a time when global trade is in such turmoil, investors and consumers are of course asking, so what happens next? Data from China signals that more to come. In the US, Trump's base is pressuring him to stand tall. China has been exploiting us for years. India, which seems to be in perhaps the most comfortable position in between, is expecting, if companies leave China, will they come to us? But Xi's potential rapprochement with Europe could also mean surprising developments for India. Because if some kind of trade agreement between the EU and Beijing materializes, the flight from China project could be shelved. It's like a chess game where each move triggers the next. Xi's words reinforce the message that we are in the square in response to Trump's idiosyncratic diplomatic style. It is also possible that some European countries, previously eager to play the role of mediator in US-China talks, will take a completely different stance with Xi's call for unity. If China's tariffs, which have risen to 125% as of today, are fully implemented on the ground, the price of many US imports will rise. This would allow Beijing to say to consumers, we support our own producers, so if the price is too high, choose domestic goods. In the long run, this could shrink the share of American brands in the Chinese market. However, many in the industry believe that even if China's economy slows down, the heart of world trade still beats there. Therefore, US companies may lobby political circles to avoid losing share. After receiving the news of the restrictions on 18 American companies yesterday, company representatives started to make statements saying, we will use diplomatic channels and seek an agreement with the Beijing administration. However, Xi's statement that the EU should stand with us may make these diplomatic initiatives even more difficult. It seems that the international public opinion, which was shaken yesterday with the news that China will impose 84% tariffs on the US, was shocked even more today with the news of 125% tariffs. In Europe, stocks were slightly buoyed by a slight rise yesterday, but after Xi's announcement, concerns were raised. Do they want to drag us into this conflict? In the US, it is still unclear whether Trump has made a sudden reversal on tariffs or opened a bigger front just for China. The president says he is trying to improve world trade, but Xi says this is clearly bullying. The answer to the question of who is right depends on each country's calculation of its own economic interests. In the midst of all this turmoil, the news that stocks rallied in a relief rally after Trump's tariff suspension had given the markets a brief respite. However, the headline, China raises US tariffs to 125% as Xi urges EU to unite against Trump's bullying, gracing the headlines today, reveals how fragile that rally was. From shopping malls to farmers markets, from high-tech companies to auto giants, everyone is asking, is this trade war going to deepen? If the US and China, the so-called two giants of the world economy, don't come to the table, tariffs could escalate and diplomatic friction could grow. Xi's idea that if we act jointly with the EU, the US will be forced to back down clashes with Trump's line that we can get along with everyone, but we won't deal with anyone who screws us over. As a result, the global order is drifting towards a shake-up it has not seen for many years. What's next? What will Trump's reaction be if Xi says our next step could be much tougher? If the EU fully backs Xi's call, will there be a rift in the transatlantic alliance, or will Trump declare the EU the enemy and raise tariffs again? Investors are asking, can we protect our profits? While ordinary consumers worry, will prices go up? Will imports disappear? Meanwhile, major players outside Beijing and Washington may be tempted to say, can we get a piece of the action in this great scramble? India and other economies in the region have said, we can be a manufacturing hub too. But the scale of the Xi-Trump duel is such that no one is sure of a clear advantage in the short term. Experts say there is no winner in a trade war, while Xi and Trump are telling their respective voter bases, we are right. Subscribe to our channel and be among the first to know the next step in this great tug of war. Xi's outreach to Europe, Trump's partly backtrack, partly tougher measures tactics, the EU's interest calculations, altogether, it is clear that a giant chess game is being played on the global stage. Yesterday's 84% tariffs have risen to 125%, and tomorrow they may be 150%. What do you think? How will trade wars shape the global economy in the long run? Will these policies, which Xi called Trump's bullying, find a response in the EU? We look forward to your comments because every day we wake up to a new development. Will we hear Xi and Trump make a deal? Peace is restored? Or will we read the headline, EU turns its back on Trump, dividing world trade? That's all for now, but one thing is certain. Both Washington and Beijing continue to play their trump cards. Stay tuned